The housing market will crash this year. If you've checked the internet lately, there is conflicting data and evidence all over the place as to whether or not the housing market is going to crash in 2023. And that's exactly what we're going to be talking about today. For those of you who are new to the channel, my name is Gould. I'm the CEO of the Selling Silicon Valley Group. Over the last 8 years after graduating from Stanford University, I have grown my real estate company here. We sold well over $200 million worth of real estate in the Bay Area. And now on the investment side of things, I have partnered with a private equity firm that specializes in hotel and apartment acquisitions. And so that's what I'm currently working on. And of course, real estate for me has been everything for my entire working career. And so there's one thing that I've really trained myself on is how to spot trends, observe trends, and analyze what's happening in the marketplace right now and use that to make good real estate decisions, because it's not just me, it's my clients and now my investors. And so we need to be able to assess what's going on right now and make decisions based on data, not based on emotion. Because right now there's a lot of emotion in the marketplace right now. And that is the last thing that you need to be doing with your hard-earned money, is deploying that money or holding on to that money based on someone else's emotional opinion as to what is going on with the economy right now in the United States and frankly, globally. Now, if you talk to your friend at the water cooler, if you talk to your uncle or your cousin, they're probably thinking right now that the crash is coming, that the housing crash is coming. And I definitely believe that there are sectors of the real estate market that we should be paying attention to where there is a potential decrease in value coming over the next 12, 24 months. Not potential, but imminent decrease in value. But it's not where you think. It's not in residential real estate, at least. And when you talk to the average person, they're probably going to say something along the lines of, well, it's the economy and oh my gosh, have you looked at interest rates? And oh my gosh, jobs. And while all of these things are important, they're actually missing the mark entirely. They're seeing past the principal reason why housing is been so strong over the last 6 months. A lot stronger than we would have anticipated, because let's be honest, when shit hit the fan in July of last year, really in June of last year, June of last year, we didn't know what was going to happen. And when we kind of came into 2023, there was a lot of reason to be pessimistic about the housing market, and we've outperformed expectations, I think, in every sense of the word. And why is that? Well, it has nothing to do with jobs. It has nothing to do with interest rates. It has nothing to do with the economy. It has everything to do with the inventory levels. And literally just read an article yesterday. This comes out of the World Property Journal. U.S. housing inventory drops to lowest levels since 1999, says NAR. 99. Article goes on to say 32% of realtors named a lack of inventory as the most important factor limiting potential clients from making a purchase. Housing inventory fell to the lowest level recorded since 1999 as homebuyers entered the market at a frenzied pace to lock in historically low interest rates. They're talking about 1999, not right now. Housing inventory and affordability continue to be the top obstacles that hold back potential clients in the housing market. So let's think about what's actually happening here with inventory. And the best way to do that is put yourself into the psychology, the mindset of someone who would be selling their home right now. And so typically you think about the reasons why people sell. And a lot of times people sell to buy another home, right? And so those buyers / sellers are completely out of the market right now. Why? Well, they bought their home at a 3% interest rate, and now they have to pay 7%. A lot of those sellers are thinking, hey, it doesn't really make sense for me to sell right now because A, not only am I going to probably pay more for this next house in terms of price, but also I have to pay a higher interest rate. And so it's not just increase in price, it's increase in price and rate, which is making that jump to that next house that much more out of reach. Then there are the sellers who would like to sell, but they don't need to sell. There's no life change that's actually forcing them to sell. And they're looking at the price that they could get for their home right now. And they're looking at what they could have gotten for it like a year and a half ago. And they're like, not super interested in selling my home right now for a discount. And you couple that with the fact that a lot of these individuals have massive amounts of equity in their property. There's no need for them to sell. They'd just rather sit on that property, maybe even take a line of credit out on the property if they need to access some of the equity that they have tied up into their house. But these people don't need to sell their home. They are in a good spot because they have plenty of equity. They can pull from that equity so they don't have to sell the home in order to realize some of that equity. And then at the same time, there's no life-changing event that's actually forcing them to sell. So the people that are really only selling right now are death, are people who are getting divorced, households that have doubled or tripled in size over the last couple of years. And then you've got people that are relocating in and out of the state or in and out of the area. And so those are really the only people that are truly needing to sell right now. And so that's why you're seeing inventory levels as low as they are right now. Now, Now, the interesting thing here is that there's still an argument being made for a looming recession negatively impacting the housing market, and that simply could not be further from the truth. First of all, let's look at historically what has happened during recessions. 7 out of the last 9 recessions here in the United States, we've actually seen housing prices appreciate during those recessionary periods. Now, how could this be? How could it be that we are going through a recession, yet housing is appreciating? Well, let's look at what typically happens during a recession. What is one of the primary levers that the government, that the Fed can use to stimulate and bring life back into the economy? It's interest rates. And so what happens? Typically during recessions, we see interest rates go down. Case in point, look at this graph. Now, when access to capital is cheaper, you're introducing new segments of the marketplace and you're giving them access to homeownership. And so this is one of those nonsensical phenomenon that happens during recessions is, hey, contrary to popular belief and contrary to common sense even, that during recessionary periods, we typically see housing prices go up. And that's because interest rates are typically leveraged to stimulate consumer spending once again. And by the way, if you're sitting at home right now and you're like, yeah, whatever, Danny, I don't care. Well, let's just play devil's advocate here and pretend like the data is actually true, because the data doesn't lie. And let's also just hypothetically say that there is a recession in the next year to 2 years. If you wholeheartedly believe that we are in the midst of a looming recession, or that we are in the middle of one right now, then it stands to reason that at some point in the future, the Fed is going to have to manipulate the rates in order to stimulate consumer spending. And in that moment, wouldn't it be nice to have a couple of properties that you bought at a discount that you can then refinance into a better rate? That's how the rich get richer and the poor stay watching the news and they get scared out of taking action. Now, that's for the residential sector. I'm going to be doing a separate videos in the coming days regarding the commercial sector, which is a whole nother story and lots of opportunity in the commercial sector. And so if you are not yet subscribed to this channel, what are you waiting for? Click the subscribe button, hit the notification bell so that you get notified when I post that video, because there are opportunities in the residential space, but there are way more opportunities, honestly, in the commercial space, and there will be way more in the next 12 to 24 months. So what are you supposed to do with this information? Well, if you are an owner of property and you are not in a position where you need to sell right now, I would encourage you to continue to hold on. There's no reason for you to sell right now. If you are an investor, if you have your eyes set on specific properties right now, there is no reason to not be stacking properties right now. Any way you slice it, in most parts of the country, most properties are selling at a significant discount from their all-time highs in 2022. And anytime that you can buy real estate at a discount, you should do it, because historically speaking, over, periods of 5 to 10 years, real estate always appreciates. And so historically speaking, if you look at and if you believe history tends to repeat itself, then we should probably be buying as much real estate as we can right now while the prices are suppressed due to all of the other factors that we just discussed. Interest rates being as high as they are right now, with the jobs market being as uncertain as it is right now, and with the overall state of the economy here too. Those are things to consider. All of these factors are keeping a lot of buyers, they're keeping a lot of investors on the sidelines. And the best time to play is when the rest of the players are off the field. So if you see the opportunity like I do in the marketplace right now, I'd highly encourage you to put your glasses on and start looking. And if you want access to any of the investment opportunities that I come across, you can text me at the number down below to join my investor list. So that's it for this video. Hope you got something useful out of it, and I will catch you in the next video.